Good morning, everyone. My name is Stewart. I'm the CEO of QC Copper and Gold, and I'm very pleased to present a brand new presentation we've put together for QC Copper and Gold, specifically about our flagship Opemiska copper mine complex. We are nearing the home stretch in terms of our recent work, which is all designed and culminated in a Maiden 43101 on the Opemiska, particularly the Springer and the Perry. We are reinterpreting this legendary mine and reinterpreting it as an open pit deposit. And we've done a lot of work to go, but a major milestones ahead. So I thought it was a good opportunity to update and also present our brand new look and feel. This presentation has a lot of new information, so please stay tuned. So very briefly, if you're unfamiliar with our broader group, it's called the OR Group. We are a merchant bank based here in Toronto. We identify, acquire, finance, and operate resource opportunities. We look to discover and develop. Effectively, that's how we operate. Each of these companies here are by and large focused on a particular commodity, whether it's copper, gold, uranium, nickel, etc. And it's got a dedicated team within each to drive everything forward. And we're an effective group at communicating with shareholders and putting money into the ground. This is a high-level overview of QC Copper. I won't break this down too much. This information is readily available, but those are the basics. I'll point out the key things is our market cap. We're just over $20 million market cap. Of course, you've got to factor in that we have a little under $4 million in cash, as well as we have a significant position in another company called Baseload Energy. We actually have 19 million shares in that company, and then that share price trades between 55 and 60 cents. So when you strip out those two, call it current asset positions out of our market cap, we're really trading for a very cheap value relative to what I believe this resource will tell. And I think the market's going to realize that post our Maiden 43101. So where are we focused? We are focused squarely in Chibougamau, Quebec. It is by no other definition a world-class mining jurisdiction. It was the most influential copper district in Eastern Canada. We think it's going to reclaim that title. It has produced over 1.5 billion pounds of copper and 3 million ounces of gold. Most of that copper, in fact, 1.1 billion pounds of that copper came directly out of the Opemiska, and about 1 million ounces of that gold came out of the Opemiska. So within the broader Chibougamau camp, our assets were the dominant producers, and we think it has the ability to do that again. Of course, it's in Quebec's Plan Nord, which is significant for infrastructure funding. Not that we need much infrastructure, we don't, but of course, Quebec has all sorts of benefits, including flow-through, support from the government, support from First Nations, and of course, we would be remiss without noting our excellent infrastructure, paved highway, railroad comes right to our property, power, water, etc. Everything is right there. It's really ideal. And so what that allows you to do is get away with lesser projects. Not that this project is lesser in any capacity, but when you don't have to build the infrastructure, the economics just get much better. And that's why we think this project is very interesting. So this is a step back at the actual Chibougamau district itself. You can see on the western side, that is our Opemiska project there, which Opemiska is comprised of the Springer, the Perry, which is where we have been largely exclusively focused as of late. And that's where this resource is going to be contained within. In fact, we think the Springer and the Perry are actually going to be a single open pit. More on that later. And then down the road, expect us to focus on the Robitaille and the Cook. Now, those are the third and the fourth mines operated under the Opemiska name when Falconbridge was operating it. And we haven't really given those their due. We see absolutely the same sort of potential in terms of expansion, but we just haven't paid attention to it because we've been so focused on the Springer and the Perry where there is a ton of data, but there is a lot of blue sky, I guess is what I'm trying to say in terms of where we will go post this maiden resource. We're going to look, we feel like we're just getting started in terms of delineating and defining the resource on our property. And then last, I'll note, we just acquired the Roger deposit. And the Roger deposit is about 15 kilometers northeast. It's right in the Chibougamau proper camp, as you can see there, proximate to a whole host of other mines. It has about over a 500,000 ounce resource. We acquired 50% of that for very good value. We see it as a strategic asset to the Opemiska, a strategic asset to the Chibougamau district overall. So those are our two project assets, and but we're going to focus almost exclusively on the Opemiska. So what was the Opemiska? It was Falconbridge's flagship copper asset, and it was a huge producer. Again, most of the production came out of the Springer and the Perry, as you can see there. These were both high-grade underground mines. Of course, not open pits like we're considering it now, but they were deep. They come right to surface. They went down to at least 1 kilometer. They were very wide veins. We believe there's lots of this, call it residual vein material left over. Certainly, there's no question about it. We see it all over the place, in particular the crown pillars. So they didn't mine everything. They were mining at a cutoff grade of 2.5% copper, which means anything less than 2.5% copper, they were leaving. There was a whole host of veins that were too skinny to be mined in the context of 60, 70, 80 cent copper, and with the economics of an underground operation. That are still there. They're virgin ground, and obviously when you're looking at an open pit, you're going to be capturing those. But the real story, I believe, behind the Opemiska is not necessarily what's inside those veins, it's what's outside those veins in the host rock. We saw very clearly and very early when we acquired this project that there was a halo effect around these veins, disseminated mineralization, which extends beyond these high-grade veins, outside in the hanging in the footwall. And we drill tested that in 2019 and proved that thesis. And again, we say that very clearly in our drill results of 2021, which we're in the process of releasing. We released a whole host of 100+ meter intersection. So that's what the story of Opemiska was. It was a flagship mine for a major operator for nearly 50 years. It shut down. We acquired it. We are reinterpreting it into an open pit. And these are sort of some of the production metrics. I've already discussed some of that. But this is the geologic model. This is how we see it here. You can see these are how we depict, and this is a cartoon. This isn't sort of to scale or real. It's just a model. But you can see these are the veins, and you can see this is us depicting how the halo mineralization has exited these veins here. And I'll point out the Gwillim fault here is the controlling structure. This is where the source of all the mineralization came from. And you can see here, we've got 13 kilometers of this Gwillim fault, which is the controlling structure for all the mineralization here. The Springer and the Perry obviously sit right on top of it, and as does the Robitaille. The Cook's a little bit different. It comes offset a little bit here, but there is big potential outside of these in the Robitaille and the Cook, but also call it step out wildcat exploration opportunities here. But expect our phase 2 drilling to be, again, more conversion on the Springer and the Perry, but also defining the Robitaille and the Cook. So this is a model that is a proven concept. It's what we call a new approach to exploring an old mine, but we did not invent this concept. It was invented long before us. In fact, there are many examples. The most famous, perhaps, is the Canadian Malartic, which is Osisko Gold, and their trade sale to Agnico Yamana for $4 billion. They acquired the asset for $80,000 and saw what we saw on the Opemiska, is that that was a disseminated deposit. What was the result? Well, now it's Canada's largest gold mine, over 10 million ounces. It's a huge success. 80,000 to $4 billion, a lot of work in between, but that's effectively exactly the same idea that we're doing on the Opemiska, except it's copper and gold. Another example is Detour Lake. It is Canada's second largest mine, but again, the same principle. It was an old legendary mine of sorts, and the team there reinterpreted it into an open pit, and you can see there it's now owned by Kirkland Lake Gold, major producer. This is how I think not all new mines, but certainly a large category of new mines going forward, call it in the next era, are going to be. They're going to be large open pit disseminated materials based off or based around old historic mines. And this is exactly what we're doing with Opemiska. So you can see here are some historical intersections, not done by us, but done in the modern era, let's just say, between now and 2010. And so when they were drilling it, they were prior to us, they were evaluating it as mining a high grade underground, sort of going and doing the veins again, just the veins. They didn't realize that the disseminated material at this point. So it was anywhere from a meter at incredibly high copper grades to very wide intersections for a vein at 10 meters. And again, extremely healthy grades here. But then when you reevaluate and you resample the core and the core outside of the veins, that's what we did, and that's what we saw. That was really the epiphany moment for us, is that you can see you start to get very wide intersections here. So it's just, you get this vein material, but you get a background halo effect, and the halo effect. So the grade outside of these veins ranges what we see between 0.4 and 0.6%. So obviously you get lower grades, but certainly 0.4 to 0.6% is highly economic in this situation, especially when you have the infrastructure in place. Other comparable mines are mining 0.2, 0.3% copper and making good money at it. And so we believe that our halo mineralization is quite a bit higher than that. But then when you factor in the veins, and there's an awful lot of residual vein material, we expect the grade to come in at quite a bit higher than that. And so this starts to become very interesting. And then the question then becomes, how big is this? How many tons can you get at said grade? Now, obviously, this grade will be determined as per our 43-101, as will our tons. That's what the market is waiting at. That's what the opportunity is. And this is a slide, a section of a particularly hole. So I think, to me, this illustrates what Falconbridge and others had missed. They drilled one hole, it's called S26. It was drilled many years ago, but Falconbridge really was only looking at the veins, and the material that they mined was very visually obvious. And so they only sampled here. This hole was over 50 meters, but they only sampled 0.6, and it was 5% copper, which is a very nice grade. When that hole was twinned, okay, 3 meters to the east of it, it drilled 81 meters and came back at 1% throughout. So the whole hole was mineralized, and that was really when everything, the view of this sort of changed. I mentioned back in 2019 is when we drilled about 3,500 meters, and we proved our thesis. Prior to that, we saw it in the data, but then we went in and we drill tested, and we drilled 13 holes over 100 meters at ore grade mineralization. And then in 2020, we raised a substantial amount of money, and when copper took its turn, and 2021 has been all about putting that capital into the ground. We successfully completed 20,000 meters. The program is totally complete in terms of its drilling, in terms of sending the assays, or excuse me, the core to the assay lab. As of last week, that was all completed. The purpose of this drill program is, well, there's many purposes, but the primary purpose is to validate the historical data. So our 43-101 is going to be heavily relying on Falconbridge data, which was an extensive database, 800,000 meters of drilling, 300,000 assays, and many maps and sections, which allowed us to back out from our model what they actually mined, which is obviously a very important part of the process. But even more important is bringing this data and allowing us to include that into our 43-101. Now, we've got a lot of confidence in the data prior to this program, because we in effect have tested it and proven that their data is good. But beyond that, we knew they were mining it, and so they had a lot of integrity in the quality of that data, because if they lied to themselves, they were losing money. So we believe that the Falconbridge data is solid. This drill program has a lot, the 2021s has a lot of twinning in there, which is going to statistically prove our opinion. Over and above that, we are going to be what we call drilling a lot of the waste into ore. So as I noted here in this particular intersection here, so if we were to use this Falconbridge hole, for example, and it is used in our model, but the unfortunate part of the Falconbridge data is that there was very little data. So this S26 only has one data point on this whole hole, but in reality, it's got many data points. It's got, let's call it 81 meters worth of data points, which we are in this process when we twin holes. So this hole that is, and others like it that will be twinned, we're going to have a lot of data. So for where this information, call it 95% of this hole is considered waste, but that's not true, clearly, because this twin hole clearly depicts that's not the case. So we're going to be converting a lot of that so-called waste into ore that will pay for itself and certainly hopefully be profitable. So that's going to be a major outcome. And of course, we're going to be expanding this resource as we know it. I'll show you on the next slide here. This is our model. Okay, so this is our leapfrog 3D model, what you see in the gold and the darker gold. So in the gold is the resource as we understand it prior to the 20,000 meter drill program. The darker shade gold is what had been extracted from Falconbridge. Obviously, what has been extracted by Falconbridge will not be included in our grade or tons in this resource. It's gone. But as you can see, there's quite a bit of material left over. What you see there in the black pins, that is our drill program, our 2021 drill program, which has not been incorporated or published into any model at this point in time, but you can see that we are looking to expand the mineralization. We've released a good deal of these holes. Many of them come back with very wide intersections with copper grades over the cutoff, which is in the 0.25% range. So anything over 0.25% copper equivalent, we consider ore, which means it'll be considered into our tons category. It'll be taken out of the waste category, and conceptually speaking, you get paid for that ton as opposed to having it as an expense. So this drill program is what everybody's waiting for. We're going to define not only what's in the gold areas here on the Springer and the Perry mines, but there's going to be ample room for expansion as well. And then I'm going to talk about areas outside of converting waste to ore where we think we're going to get additional material into our model. And this is one particular area which we call the saddle zone. The saddle zone is quite simply the area between the Springer and the Perry. This is the saddle zone right here. These are some of the holes we're going to be talking about. The question becomes, can we take these two mines here and make them into a single pit? And I believe the answer is we can. This area right here was not mined by Falconbridge, so it's all in effect virgin ground. There is no, call it, very wide high-grade vein in here, hence why they didn't mine it underground, but there is certainly, and as we'll prove right here, disseminated lower grade material that is well and above the cutoff grade, and we think this is going to come into our open pit. So you can see hole 51 here, 76 meters at nearly 0.8% copper equivalent. That is ore grade over ore width. That is near surface. That's why we have, and we've had quite a few others of holes like this that allow us to believe that we are going to, in effect, take this saddle zone and not only get mineralization here, but just increase the pit efficiencies by quite an order of magnitude, in fact. So we'll see what that comes out in the model. But another point I'll make, that not only does this become material that is going to be included in our tons, obviously there will be some waste in there, but there certainly will be some ore. The way that pits are designed as such that instead of having our pits sort of end at this area here, if we take into the saddle zone consideration, it allows us to actually go deeper on the veins, which in effect allows us to increase the tons. So I think an important part of this 43-101 is not only going to be its grades, but it's going to be its size, to sort of put an initial pin in how big is the Opemiska through the lens of which we are looking at it. I think there's a lot of people waiting for us to define what it is. And of course, I'll note it is its initial resource, whereas there's no question that this resource is going to get larger. This slide discusses that. So there are areas here where we will define in our subsequent drill programs. Of course, the saddle zone, we believe a good portion of that's going to be included in this. There's no question that we're going to look deeper on both Springer and Perry. When the Perry mine shut down, Falconbridge left a resource there, or excuse me, a reserve, higher confidence than a reserve of nearly 3 million tons at about 3% copper. So we know at depth here, there's a substantial mineralization. We're not including that in this resource. We just haven't had the time to focus on that. Same goes for the Springer. So we know there's lots of material deeper than what we're contemplating in this 43-101. We know there's material that we have drilled, what we call the eastern veins on Perry. And then, of course, as I mentioned before, there's the Robitaille and the Cook had significant past production. We're going to be evaluating those. So really, we think there's an opportunity to create multiple ore bodies here with the call it the flagship or the baseline resource and reserve being in the Springer Perry super pit, which is only going to get bigger both at strike to the east, in the middle, and at depth. And then we've got satellite deposits, which we know there's mineralization there, such as Robotai and Cook. So it's early days, but I think it's very exciting for us to actually define it, because as of now, the Opemiska is undefined in terms of what it is. I think there's a lot of anticipation, certainly at our level. We have a good deal of confidence in this model. I should note that this model here was built by the same group that is doing this 43101 resource. We haven't released those figures because it wasn't up to 43101 standards, because we had to do a lot of twinning to bring, as I said, bring that historical data into the 43101 regime. But internally, we have a good deal of confidence of the model, and that's prior to the 20,000 meters. So we don't know what the model is going to say post 20,000 meters, because we're in the process of updating and building that model, and we're very anxious to see what it says. So catalysts ahead, as I've said before, we still have a bunch of results coming due. So in the coming weeks, expect that to be on the horizon. I expect between now and the middle of August, we'll continue to release drill results. We've had really interesting ones before, including 140 meters at 0.5% from surface and more like that. The resource is going to be the major catalyst. Expect that to come maybe second half of August or first half of September. That's what we have been guiding the market pretty much from the get-go. We're actually only about 10 days behind our schedule, which we made prior to the program. So everything has gone quite smoothly. We don't anticipate any issues, but issues always could happen, but that's not what we hope for. And then from there, it's going to be a major, we believe, and nothing happens overnight, but from there, that is going to allow us to define what this resource is and go to the market. And we think there's an opportunity to be re-rated in a significant capacity, well beyond our, call it $10 million enterprise value. This is going to be deemed as a very valuable asset, large size, good grade, developable. And this can be developed in this cycle. I think that's an important point. This is not a multi-billion-dollar CapEx project. This is, in effect, lower hanging fruit. I want to say simple. Simple is not the right word, because developing a resource is always a complicated business. But when your infrastructure is there, when it's in the middle of Quebec, when it's a very well-defined resource today, then you can develop it much quicker, much faster, at a much lower cost with great payback rates. So that's why we think this has the opportunity to be very attractive. Certainly when you look at our valuation, which could be pennies at the dollar based on a future value of expectation. And then from there, it's called medium term. It's defining the resource beyond what this, call it September resource, is going to be, drilling out more, converting more waste to ore in the pit itself, looking at step out targets on the Cook and the Robotai, drilling out more on the Roger project, and of course evaluating first pass scoping study, which we call here in Canada a PEA, putting economics on this. A PEA is a desktop study, and it's relatively simple to do, particularly when there's not massive infrastructure consideration or complicated infrastructure considerations. Really, the big heavy lifting on the PEA will be, of course, environmental, which we've begun, metallurgy, which we've begun and already has a significant established metallurgy on this project. And then you've got to dig the hole of the mine, and then you've got to build the processing facility, which is the mill. And then long-term, we won't even talk about long-term right now, because we're just so focused on putting out this resource. Everything begins there. A few other things we'll point out is the crown pillar. And we're just working on a nice graphic to define. Many people don't understand what a crown pillar is, but a crown pillar is effectively the ceiling for an underground mine. And any underground mine, if you don't want it to collapse, you have to have what's called a crown pillar, which is a thick layer of earth that is, in this case, is up to 50 to 70 meters in much of it. So that means the virgin ground on the crown pillar has never been mined So, because it was the ceiling was to support structure is a good way of saying it. And this mineralization at the Opemiska comes right to surface, literally. And so you see these high grade veins. And so there's an opportunity to get very high grade starter pits, and particularly in and around the mill zone. The mill zone is where the mill used to be before it was torn down, and they, because of the weight of the mill, they left a very particularly thick crown pillar. And so we believe from the data, and given the width of this, is this going to be a good place to start the pit and get early payback, get not only the high grade veins, but also the disseminated material in and around it. So that's going to be an advantage economically speaking for this project. We've got proven metallurgy. Okay, so this operated for 50 years. How it was done, it was they had a concentrator on site, which again is gone. And they shipped it on rail, which is why there's rail right on this project. They shipped it to the Horn smelter, which was owned by Falconbridge at the time, which of course is the Horn, I should say, the Horn smelter now in Rouyn-Noranda, still operating. And it had a very clean concentrate. When you're marketing concentrates, you have to be considerate of the deleterious elements. There were largely none. We produced or I should say the Opemiska at the time produced a 25% concentrate with gold credit and silver as well. It's a very marketable concentrate, and we expect that to be very similar. However, you need to consider the new metallurgy in the context of an open pit, as opposed to just mining those veins. We're going to be mining the hanging and the footwalls, which may or may not have different metallurgy. Nonetheless, we need to determine that. And that is being done on both the Springer and the Perry. A substantial portion of this core that we drilled in 2021 and other campaigns has been sent to SGS, and we'll have those results. And that will be included in our preliminary economic assessment, which is we expect towards, let's just call it in 2021. Social license, of course, absolutely critical to any mining operation. And I would say, again, going back to an earlier slide, when I said Quebec is world-class jurisdiction, I would say part and parcel of that is the communities and the Indigenous and First Nation communities, but also all of the other communities. Quebec is a mining culture, has a mining culture. It's prospered over the last and thrived over the last 100 years as a result of mining, forestry, and the extraction industries, and it will continue to do so for the next 100. We have paid great attention to fostering relationships with the local communities of Chapals-Chibougamau, and the Ojibougamau. We take great efforts to educate, inform, employ, give economic development opportunities. You can see here's a photograph of our town halls. We've had a number of them, both in person and online. And we believe that together we will benefit with that community in terms of, as this goes forward, we certainly hope this gets developed this cycle. That means jobs, prosperity, and economic development for the community. And obviously, that's good for our shareholders as well. A lot of people, let me just include this, I'll just real quick. A lot of people don't understand the value of a 1% copper deposit vis-a-vis a 1 gram gold. Generally speaking, retail investors and even institutional investors are very familiar with what the inherent or the perceived value of what 1 gram gold means in an open pit, mostly because that's where Osisko comes in at. That's where Detour comes in at. That's where Cote Lake. So basically 1 grammers are the, call it benchmark for an economic gold deposit if you can get the scale. Okay, let's just sort of use that rule of thumb. Now, but what does that mean in terms of 1% copper? Because certainly that's a target that we're going to be reaching for. If we can hit the 1% with a good level of tons, oh boy, is that going to be an economic deposit. So just to put things in context, everything is valued by a per ton of rock material. And you can see here using, and coppers fall off a little bit here, but let's just use this as a benchmark. You can see the value of 1 ton of rock is nearly $100 US versus, let's do gold a favor here and round up to $60. So you can see that a ton of 1% copper is worth substantially more than 1 gram gold. And so those are the type of economics that are ultimately going to fall out into the PEA and subsequent economic and engineering reports like a pre-feasibility and feasibility, et cetera. So we just included this slide to give people context, 1 gram versus 1%. These are our comparable projects here. There's a lot of noise in comparables, whether it is what stage it's at, how large it is, the capex, etc. So again, there are no perfect analogs here. However, what you can see here is we are cheap. And big deposits here. Philo, I mean, beautiful deposits in Argentina, more advanced, but $1 billion market cap. And the grades there are 0.6. So we think we'll be awfully competitive with any underground mine here, or excuse me, open pit mine here. We believe we will be extremely competitive on the grade. We believe we will have a very sizable resource in terms of tons as well, which lends itself to how many billions of pounds of copper you may or may not have in that deposit. And that translates it back into market cap. So I think there is a huge upside potential for Opemiska. The catalyst is going to be defining a first pass 43-101. And then we have to put some economics on that. And then I think simultaneously expect us to go out there and grow it in terms of hopefully increase the grade, but certainly increase the tons. Very quickly, I cannot ignore the Roger project. It's actually a very interesting project. I talked about 1 grammers. This is a 1 grammer. It's about 535,000 ounces of contained gold equivalent at about one gram. It is not large enough to stand on its own today. No question about that. You need 1 million ounces to even consider developing the capex or the processing facilities for any gold mine. So this is call it an established resource. The discovery has been made. It's got size. The question is, how big is it? I certainly think it's interesting when you put it in context of where it is. As I said before, it's very close to the Opemiska. It's very close to Chibougamau. We bought it for strategic purposes. We bought it for value purposes. We paid less than $4 an ounce. That is distressed prices if I've ever seen it. Also, I'll note we own 50% of this, and the other 50% is owned by SOQUEM, which is a Quebec-based mineral and discovery organization, which is funded by the government, and they are partners with us and partners with many people. But it's always great to get good partnerships in Quebec, and I think not that was why we bought it. We bought it strictly for this resource and the value that we got relative to the price that we paid. But anyways, this is a look at it. It's a pit-constrained resource, just like Opemiska's pit-constrained resource is going to be. In the dark here, you can see this is the mineralization. This is where the 535,000 ounces come. These are the veins. But there have been quite a few drill holes. And in fact, this drill hole right here, I believe, is a 500-meter drill hole from surface with 0.3 gold, 0.3 grams gold per ton throughout. And a lot of it is not even included in the mineralization in the pit. So I guess the moral of that story is there is a lot of room for growth here in Roger. Don't expect us to focus too much attention on it 2021, but 2022 and beyond, this is interesting. It gives us all sorts of optionality and growth potential here within our existing portfolio, but also within the broader camp. Last I'll mention, I've already mentioned it, but we've got, I think it's worth repeating. We've got 19 million shares in a company called Baseload Energy, at a 60-cent share price. We get no value for it, but it's a real asset. And I think there's going to be a lot of upside in the price of those shares as well. When the time is right, we will monetize that. So, those shares aren't just there to look pretty. When the time is right, that is going to be cash in our bank that we will put steel in the ground or maybe make more acquisitions. Who knows? But this is a valuable asset for us to have. We sold a non-core asset. When I say we, QC Copper sold a non-core asset to Baseload for a valuation of $1 million, and it's turned into $10 million. So that corporately has been quite a good transaction, and we'll monetize that in the near term. And then I would be, again, remiss without noting our team. It's all about the people in the junior mining industry. We've got a very strong technical team led by Charles Baudry and many people on site in Chapais and also in Val d'Or. And then we've got a great board with Pierre Gaucher, Phil Cloutier, and the rest of the team here, which is represented by Ore Group. So that's it for now. You can see here we've got the latest webinar link there, which is this particular episode, and my contacts there and my phone number. I'm available at any time. I get back to my emails when shareholders reach out. So thank you for your time, and I wish you good luck.